Good morning to you folks. So today we are going to start our 2026 mentorship series as a continuation to the 2025 mentorship. So if you're done with the other videos, you can come and continue with this. So I come with a very interesting topic today, something you need to add to your trading, or something you're doing but you don't really know that you are doing. So today I want us to look at IPDA, or what stands for interbank price delivery algorithm. So this suggests that the market or the market makers don't just move the market randomly, and everything works in a specific and programmed algorithm to move the market and manipulate certain prices at given times. So basically that is what we are doing for everything that concerns trading. I don't want you to look at this as a casino. I don't want you to be thinking that you're going to come here and gamble yourself out and make money, because in the long run we are looking at consistency, not profits. So if you look at, so I don't know, if you were once a gamer, you're going to be looking at not winning that exact game, but rather making it up in the ranks or reaching a certain goal or going to the legendary or something, but it's all about growing yourself with this. So you're not going to come and gamble yourself out. So that's why I say that if you want to do trading as a side hustle, those who call it a side hustle, it's better not to start off. It's better you just stay at where you are, because this is something that consumes and needs more time than what you expect. You have to put in years. We are talking years, not hours, not days, not weeks, not months. Years, not a year, not two, not three. Basically, a person's learning, like integrating what you studied, getting to know what you are doing right now, might take you even 3 to 4 years. So basic learning and you starting to develop a system that actually works takes place in your 3rd to 4th year. So these are the things we were told when we were starting, and me and my peers used to say that it will take us a year. We had like a lot of enthusiasm in this thing. Like, we studied a lot, we had sleepless nights in that first year. We read a lot. I studied. I don't know that I left out anything untouched. We looked for concepts. We did a lot. I happen to have a very large book about indicators, so you're going to find yourself that there is no indicator I don't know how to use. But if you see my chart playing, I'm only having 2 indicators, and these are just to help me mark. I'm having this macro tracker because I don't have time to be marking every macro, and this can help me. And then this is also the new weekly and the new daily opening up, and those are just markings. I have nothing that tells me that this market is overbought or oversold, or the volume is like this, or this stochastics are behaving this way. I have nothing to work with that. So people in turn happen to find ICT a little bit hard for them, and I happen to have a saying that if we are looking at mango trees, a mango tree with the most ripe fruits is the one that will get a lot of stones thrown at it. So you happen to find a lot of people hating to ICT. Stuff doesn't work. It's hard to gain profitability. Yeah, it has to be hard. You thought you're going to come in this and get a simple way of making money. So trading is not a get rich quick scheme. Everyone you hear saying that ICT it's hard, basically they fail to understand it, and they just resolve to hating. So I wanted us to just dive into this. This is the algorithm by the Enigma himself. So how can we use this? You knowing that everything happens planned and programmed to happen. So we are going to be looking at the IPDA backs back. We look at specific cycles of time where we have a 60-day look back period, a 40-day look back period, and a 20-day look back period. So for a 60-day look back period, I would say that this is favorable for swing traders, or it is favorable for higher or longer time trading, like if you are to look at price action in weeks, like that. And a 40-day look back period is something intermediate. Then a 20-day look back period can be very good for us day traders, so you can get to know where the market is rallying to. But basically this helps us. Remember, in the 2025 mentorship, we've been studying about the PDRAs, we studied about liquidity, we studied about a lot of interesting topics and PDRAs and market structure at large. But now we want to incorporate that and formulate a model off of that to what we are trading or what we look at when we are in the markets. So all those PDRAs that we studied internal range liquidity, where we have the fair value gaps, the order blocks, we have the quadrants, we looked at the mean thresholds, the consequent encroachments, we looked at breaker blocks, we looked at mitigation blocks, rejection blocks, everything that we happen to study about that. And the external range liquidity, the relatively equal highs, the old highs and lows. We want to use that, whatever we studied. Now we are at the point of using it all at once. So you have to get all your information together. Now we are using it. So in these time periods, I'm going to be talking about what basically we are looking at. You are going to get in this 60-day look back period, or the 40-day or the 20-day, and you're going to look for PDRs and interesting price points. So basically you want to have the highs and lows of these look back periods. So if I'm looking at the 60-day look back period, which if from where we are at right now, 60-day look back period, actually we start at the previous day, so this day hasn't closed, so this is us going to the next day, the previous day. So this is a continuous thing. So if today closes, then this will move and go to the next day. So that's how it works. It's a continuous cycle. You are going to come and look into, if we are to talk about the 60-day look back period, this is where it ends right now according to where price is. So you want to have the high and the low. That is our high for the 60-day look back period. Delineated on the chart. So this is where you need different charts and templates, so you can customize it, because you can't have all this on the chart. That's why we need multiple charts. That's, people say that traders don't need those screens they have, but we need them. Now this is where they come in handy. So you're not going to have all of this marked on one chart. So that is the 60-day look back high, and this is the current low. also delineated in chart. So what is the overall structure of the market currently? What is the market doing? We have the market backing up down. We are delivering sell side. 60-day look back high. Like the period where it starts, I'm going to start looking for PDRs. We have the market coming back into premium. I told you we are going to be using all concepts we had studied. So if you measure this period, we are in premium. This is discount, this is premium. So we have the market currently in premium. So what can we look at? What can we have, or what pulls our eyes to it right now? We have the high and the low. What is in close proximity? The high, because we are currently in an uptrend. I want you to look for possible PDRs. So starting from where the market is right now, we have a bullish order block right there, this down close candle. So this is a bullish order block. Let me take this off. This is a bullish order block. Why am I not taking this? Because the body of this is not below this candle's body. So this is the safe order block right there. So main threshold of this, we want that delineated on chart. That has been threshold of that. Now this is how we get reference levels on the daily time frame. So that mean threshold, I'm looking at that. We have this breaker high, but I'm not looking at the down close candles. I'm looking at the up close candles. So this high right there. Right, so I'm looking at that as my breaker. We happen to have the market dropping into that, tapping that one more time. So I have this week, it was broken. I'm going to mark out. Now this is where we are going to, you need to have a lot of information to use this concept. So I'm going to mark quads on this. Look at half of that week right there. Half of that week tapped into that, then we rallied higher. So we are going to be looking at specific PDRs, not caring whether they are bearish or bullish. Just have your PDRs marked in chart. Then when you are trading, or when you are looking at the market real time, you're going to be looking at this as your reference levels. Having a breaker, having a wick, looking at half of that, having an inversion fair value gap right there. Now these are price levels. If the market happens to drop within these, I'm looking at them as reference. I'm having this order block happen to close above it, turns into a bullish order block right there. Right there, and you will see that being respected. So within this, we'll have this as a breaker. Remember, we have also the opportunity of pushing price lower. So we are looking at what is going to push price higher first. Then we shall look at what's going to push price lower first. I'm having this order block. I'm not going to mark this fair value gap because I'm looking at the order block. I don't want the chart clogged. So I'm also having this fair value gap as my last PDRA. I'm looking at taking the volume balances to it. This is the inversion fair value gap in deep premium. So looking at what can push price lower, we have that. We also have this as a rejection block, but I'm not interested in this. I want the market to come and tap this because this is a wick that came back into this. So I want, if the market is to respect anything around this, I want it to come to this inversion fair value gap. So now these are the PDRs I'm looking at for the 60-day look back period. For the 40-day look back period, it's kind of the same. So now this is better and it gives you a large field of view to do it at the 60-day look back period. But if you want, or if you feel like, because if this day closes, I'm going to move all PDRs to move, because this candle is part of the 6-day look back period. If you can look at that, it's part of it. If we move, I'm going to also move to this fair value gap right there, scale down, because this is no longer part of the 6-day look back period. So I immediately like using the 60-day look back period because it gives me a large range of view and I can just do analysis for all the look back periods. But if you want to do it at a small scale or scalping, you can use the 20-day look back period, look at the PDRs and where the market is going to in the 20-day look back period. So we have this black candle being the end of the 20-day look back period. So I'm looking at the start of this black candle. We are looking for PDRs, having this week, having these volume imbalances right there, having a tiny fair value gap right there. So you have everything of yours marked. Where is the market trailing to? Higher. So I'm looking for higher price action, or starting to see these PDRs fail to push price higher, and my bias will shift to attack this 60-day look back period low. So this is IPDA. I don't want to be making long videos. I want simplicity and my videos to be very easy to watch and just getting straight to the point. What you want to do is to look for PDRs within these cycles, and let me show you an example of this out. Now these are the order blocks we marked. When you go on to the lower time frames, you can formulate models off of these periods. So now look at, this was the order block that we expected to push price higher. We happen to have, this is the 3-minute time frame. Market came and tapped that. We have an inversion of this. So at the inversion here, you would have entered for buys right there. So these give you reference. Or suppose you are pushing price lower, you want to see closures below this and wicks respecting these PDRs you marked on the daily. So you are not going to be blinded and just looking for where the market is going to go to. You will know where the market is going to go to. So now look at, this was the the discount week. The market came and tapped that at the high right there, and then we rallied higher. So I want to look at consequent encroachment of that. Market failed, had a structure shift and a fair value gap. Now this is where the models start formulating. Now this is the 2022 ICT model, having a fair value gap plus a market structure shift right there, pushing price higher. So you are going to do that basing on what you marked in the IPDA cycles. So that is it. That's how we do market analysis on the daily time frame. This is how you have to treat the daily time frame to know where the market is going to go to for a particular day. I can be using these PDRs, the buy side levels. I didn't talk about buy side and sell side. You can have this as, because this is the 20-day look back period high right here currently, and I'm having, let me see, I'm having the 40-day look back period high taken out. So if we're around here, you would have been looking at that high as the 40-day look back period high. I still have the 60-day look back period high open and the low. So want any of those attacked, then I'll look at the opposite side of it. But I'm teaching you in reference to someone who watched the videos in the 2025 mentorship series. So if you want to keep up and keep track, you're going to go back and watch the 2025 lecture series. Or if you have an intuition about the market, you have an idea about ICT trading, or you know what you're doing, and this can make you a little bit better. So that is it. But if you're brand new to this, you are not going to grasp a thing, because you see, there is not a lot of explanation to this, because I taught everything in the 2025 mentorship. So I'm talking to the students that have been watching these videos from the start. If you feel interested and it makes you feel like you can get something from this, you need to first go back to the 2025 mentorship and watch that. So this is the US dollar or the DXY. You're going to go back and you're going to go to the pair, or if you're still trading forex, if you are in futures, you're going to go to that, to either ES or NQ or Dow Jones or the FTSE. You're going to incorporate this in your trading. So on the daily time frame, look into these look back periods, look for PDRs, use them for your daily trading. Thank you. Stay in the scopes of risk management. Make sure that you are not hurt. Mental capital can't be just deposited into an account. It is built over experience and knowledge, which gives you confidence to squeeze money out of the market. A great day. Thank you. A great trading week. Today we have a bank holiday. I won't be trading. We are going to be off. Until then.